This is 15-Minute Fundamentals, where we interview core contributors within crypto and gain insights into their day-to-day operations. In this episode, I'm joined by Mike and Matt, who are both core contributors at Synthetix, a non-custodial derivatives liquidity protocol built on Ethereum and Optimism. To cover the basics, decentralized derivatives exchanges are smart contracts-based exchanges that allow users to mint and trade the synthetic versions of different assets globally. On-chain derivatives exchanges bring tokenized representations of all asset classes within the reach of anyone with an internet connection. They bring down the cost of creating derivatives to one function call. Once an asset is represented as a token on-chain, it inherits the advantageous features of blockchains: global liquidity, predefined rules of operation, immutable audit trail, and open source transparency. The derivatives market was initially dominated by order book-based solutions, most of which suffered from low liquidity. Pooled liquidity derivatives exchanges emerged to solve this liquidity bootstrapping problem and have since gone on to facilitating tens of billions in aggregate trading volume. Typically, the primary business model for on-chain derivatives exchanges is to generate revenue by taking a cut of the trading fees paid by traders. That is, the exchanges take a portion of the liquidity provider's revenue. In this episode, we discuss what Synthetix is and what makes it unique, how their products work under the hood, Synthetix V3, we assess the market opportunity and Synthetix's position within it, we discuss current growth drivers, the team behind the project, plans for the future, and more. Hello, Mike and Matt. Welcome to 15-Minute Fundamentals. It's great to have you guys on.
Yeah, great to be here. Thanks for having us.
Great to be here. Thanks for having us.
Awesome. Today we're going to be diving into the details behind Synthetix. And before we go into those, could you just give a quick introduction to anyone not yet familiar?
Yeah, so Synthetix is basically a decentralized liquidity layer on Ethereum and Optimism. And it serves basically as the liquidity backed for a lot of protocols in DeFi. So we're integrated with everything from Curve and 1inch for swaps and exchanges to derivatives platforms like Quenta, Lyra, Polynomial, and a handful more that are launching soon. The way it works basically is that stakers provide liquidity, which then collateralizes a suite of different synthetic assets. So everything from spot synths to perps to future markets like options and what have you. In return, those LPers earn rewards and market yields. This liquidity then underwrites all the trading of synthetic assets that happen within the platform. So like I mentioned, from perpetual futures at Oracle prices. And what that does is basically eliminates the need for traditional order books, counterparties, and really provides, pretty deep liquidity that's composable and fungible across markets. So, eventually we can have some pretty cool products and structured products that are built on top of perps and options and various instruments for that.
Perfect. Thank you for that overview. And I know you touched on this a little bit here, but a high-level question just to set the stage. How would you describe the core purpose of Synthetix's existence? So what is the problem that you set out to solve?
Really, the problem that Synthetix is solving is that it bootstraps liquidity for new and existing decentralized exchanges. Really, what that means is that protocols don't have to handle the nitty-gritty details of sourcing this liquidity and can instead defer to Synthetix's products to support it. So for someone like Quenta, let's just say, they'll just tap into Synthetix perps offering and then build and integrate on top of it to build perpetual futures trading front end. For someone like Lyra, they'll tie in with Synthetix liquidity to build options trading protocols. Polynomial, Decentrix, and so on, they'll all build perps trading protocols as well. So instead of having to source liquidity, maybe direct some sort of your token emissions towards liquidity and then handling each individual synthetic asset separately, you can just tap into Synthetix and all of that's handled for you on top of the years of research and development that Synthetix has spent perfecting that process.
I'll add in just real quick. Matt kind of noted a shift in what Synthetix has become over the past couple of years, and we're right in the middle and kind of at the turning point of this transition where, if you were familiar with Synthetix back in 2020, 2021, it was Synthetix, we had Synthetix Exchange, everything was basically Synthetix, and we had user-facing protocols or user-facing front ends. At this point now, we are becoming built for different protocols. So, we're kind of throwing around the idea of hey, Synthetix is going to be a liquidity as a service protocol. And, really other protocols can build on top of us. And that's kind of the core of what we're getting to and the shift that we're making internally.
Awesome. That's great. And diving deeper into that, you mentioned you're very different than in 2020. So could you maybe describe how your product suite has developed and then where you are as of right now? So what are your core products and their features?
Early on, when Synthetix launched and had pivoted from Haven, we pivoted from being a stablecoin project to basically becoming Synthetix, which was, stablecoin with SUSD, but then also the concept was, hey, let's provide various synthetic assets that people can trade with zero slippage and infinite liquidity, which, we learned at the end of the day, infinite liquidity and zero slippage were actually kind of bad ideas. And so we've modified that a bit, but now have products that have low slippage, low fees, really deep liquidity comparatively to other newer protocols. And that now enables a suite of products. I'd say at the moment, the product with the most traction, which is also kind of the newest and most recently released, is Synthetix Perps on Optimism. So just last week, trading volume peaked around 500 million in a day, which the community was excited of, but we really kind of see as like that first stepping stone before we're hoping to do billions of dollars a day in volume through Perps alone. And we're continuing to see that grow via new partner protocols. At the moment, most of that volume is coming from Quenta, but we have a lineup of additional protocols and new interesting products that are going to be launching on Synthetix Perps in the coming months. And I think part of what's really driving that adoption and the use of it is, in the wake of like the implosions of FTX and other centralized exchanges, I think we're really seeing demand for transparent and permissionless access to these types of markets. So people moving on chain and feeling confident that they're not going to get rugged or their collateral is going to be used for other purposes. You deposit and you're trading exactly what you intend to trade. And that's been enabled, I think, by the scalability from Optimism. Again, referencing back in 2021, 2020, everything was built on mainnet Ethereum. And so the cost of transacting, the speed of transactions just wasn't there. But now on Optimism and Ethereum L2s, we're able to see that transaction cost come down dramatically and the speed at which it happened. So with a few more modifications like Bedrock coming from Optimism, which should speed up transaction times on our Perps product, and then also more updates from our partner front ends, we really think that user experience of trading Perps on chain should reach or even exceed parity with the central exchanges.
Just to throw in a tad more, I think it's really important to notice that these possibilities weren't possible on Ethereum L1. This entire suite of products that includes perpetual futures trading, options trading vaults, and then basis trading vaults and everything else that's being built within the Synthetix ecosystem isn't possible on Ethereum L1. It is possible on L2, which is Optimism, and it's been fantastic to build out this ecosystem with the partner protocols and integrators. So yeah, that's just a great point to explore as well.
Yeah, that was a great addition. I mean, your spike in trading volume and the general momentum you've had since the beginning of this month has been great. We'll speak about that in a bit more detail soon because I want to learn about the drivers there. But now that we're on the topic of your product and the innovation you've brought via building your product suite on L2, what would you say are the most relevant or important smart contracts or the most innovative things you've introduced to the market within the whole Synthetix ecosystem?
So as it relates to direct smart contracts, obviously Mike and I are not developers. Us pointing to direct code is not our strong suit. But as it relates to the innovations around products, moving from Synthetix Perps V1 to Synthetix Perps V2, which we just call Synthetix Perps, was a massive innovation in three really key ways. The first is the introduction of these off-chain oracles, and pretty much how this off-chain oracle works is a person will initiate a trade, and then approximately 8 seconds later, their trade will be filled, and the price will be pulled from the off-chain oracle, and they'll get their fill. And pretty much what that provides for the user is the best experience as it relates to fees, because you can cut fees down to, right now you've got fees for Synthetix Perps pairs to anywhere from 1 bips to 15 bips, depending on if you're in Forex commodities or cryptocurrencies. And these off-chain oracles have solved a lot of the woes around front running that Synthetix has faced for a pretty long time. But alongside that, there's really these two risk management features that Synthetix has introduced that I really don't think has been introduced elsewhere across all of DeFi Perps. And these two risk management tools are really built for the stakers backing the markets, but it allows Synthetix Perps to scale. The first one is a premium and discount. So how that works is if there's more longs than shorts in a market, for someone to continue going long, they will pay a premium to continue doing so. That's a risk management tool because it pretty much incentivizes someone to come in and take the short side of the market and neutralize it. And then there's this dynamic funding rates. That's the second risk management tool. And how these dynamic funding rates work is, yet again, it's pretty much as markets continue to stay long skew for a longer period of time, funding rates continue to tick upwards and upwards to incentivize arbitrageurs to step in. And we've seen a ton of volume out of people that are arbitraging the funding rates. And at the end of the day, what that does is it delta neutralizes the market and makes it safe for stakers to back it, as as they don't have to be exposed to this long-term exposure of like an up and down of ETH or Bitcoin or even these long tail markets. And it really allows Synthetix to offer, right now we offer 23 markets, and in the future we hope to continue to expand that, these risk management tools that are really helping out.
Definitely. That's great. And now that we have a pretty comprehensive picture of your product suite, I'd love to speak a bit about the market and how you think about it. How would you, like, in general, describe the current derivatives and exchange market, and especially from the perspective of your position within it and the unique selling prop?
I think the one interesting thing to explore at first is that within this derivatives market, Synthetix really doesn't have one direct competitor, as it isn't user facing. Instead, like, as Mike and I said, it serves as this liquidity backend to power on-chain financial instruments that range from perps, options, spot synths, option vaults, and other products, like these basis trading vaults. So, you could say that an individual product like Synthetix Perps will maybe compete with, like GMX or Gains Network or, Mux or any of these protocols, right? But Synthetix doesn't have a direct competitor in its liquidity provisioning space, where it's really trying to power financial derivatives and on-chain instruments throughout all of DeFi instead of just focusing on one product. So I think that's like a really interesting like way to set the stage on all of that.
I'll just add that there's a tendency, like within communities and people kind of, tribalizing like the protocols they're backing to be like, oh, GMX is our competitor, or Gains Network, or, whatever, or DYDX, right? And, I think that I kind of like alluded to it with the reference to the centralized exchanges, but really we see it as like a rising tide lifts all ships at this moment. And the more people that are moving on chain to trade perps or trade other derivatives, the better our products are going to be. So, we actually look forward to the growth of these other protocols, because that's moving people on chain and moving some of that volume on chain and really expanding the market for all of us. And I think where Synthetix is a bit unique is, we can then in the long term, start launching alongside these other protocols, and it creates arbing opportunities for traders and some really cool composability that can happen, where perhaps down the line we might be integrating with what some people might view as competitors at the moment. They might end up integrating with us to build structured products or other ways, just based on the composable nature of Synthetix.
Yeah. Mike definitely alludes to a great point. Like, I don't think the DeFi space is at a point where we're all going to fight over this like smallish pool of on-chain volume, and instead just increase the pot and like grow the pot for everyone. And yeah, Mike also leaks a little bit of alpha there, because there definitely have been conversations with, you could call them perceived competitors, to build these sort of structured products to arbitrage between each one. And everyone's excited to do that, because why wouldn't you try to find more interesting ways to build on top of each other on chain?
That's exciting, definitely. And I really like the framing and how you think about the positioning of Synthetix within the market. Now, are you able to shed any light on how you are internally thinking about the business potential for Synthetix? What is like the bull case for what you're building?
To get to that, I think it might take a little bit of backtracking to focus a little bit on V3. Synthetix V3 is kind of the internal terminology we're using for this whole new architecture. We've kind of alluded to it, and I think perps is just one element of what Synthetix can be as a whole, and kind of that bull case for Synthetix. So, at the moment we have perps, it's built on Optimism, but it's built on our legacy infrastructure. And that infrastructure and the contracts have been around since 2019, 2020. And it's just this constant layer of like band-aids and fixes and plaster and this whole mess of contracts that when it comes to make an update or slightly modify something, if our engineers aren't going through this massive checklist of everything that has been added and kind of Frankensteined onto the original contracts, then things can break. And so it really slows down our development time. So V3 was initially kind of conceived as like, let's re-architect our base contracts and make it so that as we're building perps and spot synths, we can have a much easier time deploying new stuff. As the engineers started kind of working through this framework, it became clear that, hey, if we're re-architecting for perps, why can't we re-architect for permissionless markets in general, or make it much more modular to allow more products and more markets to be built on top of Synthetix to tap into that liquidity. So really, this is where the idea of Synthetix as a liquidity layer across multiple chains and rollups kind of comes into play, where we're working on Synthetix V3. We're in the process of transitioning to that, and we'll be rolling it out over the year with various elements coming through. So that includes multi-collateral staking. At the moment, you can only stake an LP or SNX tokens to back like the debt pool. We have some wrappers and whatnot, but those are a little bit clunky. And so adding in staking for for ETH or LP and ETH to back the debt pool is something. Creating permissionless markets. So what we mean by that is any protocol can eventually come in, build a market, whether it's a new version of perps or it's options or sports betting or insurance markets. Think of the financial instrument, and you can come in and tap into the Synthetix liquidity, and build that, and then deploy that wherever Synthetix happens to be. So really, we see kind of this liquidity layer acting across multiple chains within V3, and then multiple different markets like perps being built on top of Synthetix.
Thank you for sharing the context around V3 there. That's exciting stuff.
And I guess that kind of answered your question a bit, right? Like in terms of like where we see it, and like it's almost like a fractal pattern of like all the opportunity for Synthetix.
Yeah, exactly. And I mean, we're at the stage in the crypto market where it's pretty hard to quantify like the bull case of the market potential, because it's basically unlimited at the moment. It feels like it. If we start having most of exchange and just trade volume move on chain, then
I think that's really what it's summarized on, like getting as many people on chain as possible and getting them integrated within the Synthetix ecosystem is like the best case for Synthetix and really the best case for DeFi as a whole. Like we all don't want to see people stuck on centralized exchanges on some private database somewhere, and then 6 months down the line they find out that like, oh, we actually didn't have your money. Like it's gone. It's over. Call it a day, pack it in. And that's the overall bull case for DeFi and Synthetix V3 as a whole. Like this whole idea that you can build permissionless markets and assets in a system that is fully transparent and can be looked at any time is a massive bull case for DeFi. And it's not just like, oh, look, how is Synthetix going to benefit from it? It's how is the overall landscape going to use these years of research and development to benefit themselves? Because anyone could deploy on that. You, in theory, could see, a competing perpetual futures protocol just use Synthetix's infrastructure because they're like, okay, yeah, this is much easier to handle the liquidity management. And then, one of the points of Synthetix V3 is also cross-chain liquidity. You could get to a point where Synthetix perps will exist. Yeah, it currently exists on Optimism, but you could also have the same trading experience on Arbitrum. And the liquidity is just, a cross-chain messaging transfer when someone makes a trade, right? So like that's where things really, really get exciting with the possibilities of Synthetix and DeFi as a whole.
Definitely agree there. Now, as the market grows and you're shipping new products, let's speak a bit about financials and how you'll be capturing value from that growth in the market and the volume that you're seeing. Can you walk me through Synthetix's general economic model? So who pays fees for what and how they're distributed between supply side participants, so liquidity providers and anything else, and then how value is also captured by the protocol?
All trades that happen tied in with Synthetix liquidity is charged a trading fee. So for Synthetix perps, as said before, that could range from something like 1 bips to 15 bips, depending on what sort of market it's dealing with. For spot synths, you have set spot synth fees as well. But the really interesting thing about Synthetix is that there's no individual carve out for Synthetix the protocol or like Synthetix the Treasury Council. All of the trading fees are distributed to the LPs that are backing the markets, and in this case, that's stakers that are backing all of these markets. Right now, there's also a SIP that just got a Synthetix improvement proposal that just got passed that'll provide a fee share for the integrators that are integrating with Synthetix perps. And then just a quick breakdown on that, they'll receive 10% of the fees generated that they generate as a fee share, and then it slowly ticks down as they hit certain metrics. So yeah, Synthetix doesn't have this like carve out for the protocol or for contributors or anything like that. Everything is returned back to the LPs that are backing the market. And then the Synthetix Treasury Council will also distribute fees to integrators as an incentive to build on top of perps.
Got it. That's very clear. Now let's go to the very interesting topic of your current momentum. In the beginning there, Mike, you mentioned trading volume has spiked. It's just the first step, but I'd love to hear a bit more of context around what the current main growth drivers are and also possible challenges and where you see that developing in the near future.
At the moment, it's really kind of a couple of things moving in parallel. So we have perps and we have a few releases coming up, which are going to refine perps specifically, as it stands on Optimism. And we have half dozen additional protocols that are actively working to integrate perps into their front ends or into structured products. So I think a lot of our growth is going to come from, releases from those partner protocols, specifically around perps. And that's going to be, in the short to long term, I think. That'll be a continued main focus for the protocol is driving that perps volume. I guess another little volume driver that will probably happen is Synthetix Treasury does have just over 3 million OP OP tokens that were part of the phase 0 drop from OP Foundation. Those have recently been approved via SIP to be deployed via trading incentives starting sometime in April. So those will be active, and I think that will be definitely a short-term driver of volume growth as more people have an incentive to come try out the product and see if they like it. In the medium term, I guess, as we continue to roll out elements of V3, we anticipate definitely like a growth in our liquidity of SUSD and really like the entire debt pool as we add in multi-collateral staking, different efficient ways to back the debt of the protocol, and then also as new markets roll out. And when we say markets, we say it references a few things internally, but markets like perps markets, so adding new assets, but then also markets like an options market or other financial instruments that we've mentioned.
Just to drop a tad of alpha, Mike called it a short-term optimism trading incentives, but it's actually 17 weeks of trading incentives. So it's actually a pretty long time, I guess, in the DeFi or crypto world. So, folks will definitely be able to trade those and and receive the incentives and so on. And that's one of the great things of deploying on Optimism and having access to these things to onboard new folks. So that'll definitely be a great boost to Synthetix perps, and it'll really help to bring new folks in.
Definitely. That all sounds good. And as said, if we pull up any of your charts on Token Terminal, then the current momentum looks good. Your product roadmap sounds pretty solid. So I hope you'll be able to maintain that and grow that momentum from here. Then I wanted to ask about your team briefly. So can you give some context to what the core contributors to Synthetix at the moment look like?
On the current size of the core contributors, I think we're about like 25 of us. Maybe there's a tad more core contributors that are in various elements, just split up along the perps team, V3, marketing, PR, and so on. Pretty wide array of backgrounds. I think a lot of folks come from like the traditional dev and tech world. Some folks were just people that were so involved in DeFi and were just around for so long that they just got hitched along with Synthetix, or maybe got hitched along with a project and then came over to Synthetix. Obviously, Kane Warwick founded Synthetix. It's not really something that we can that anyone's going to forget. But really, when it comes to additional contributors, because really there's a whole governance side of Synthetix that has these really vital contributors that are elected by the token holders. So with that, there's probably another, I think there'd be another, you could say there's another 20 or 25 active contributors through various areas of governance, whether it's the Spartan Council that deals with day-to-day decisions and like approving all of these proposal changes. Like when Mike and I mention a Synthetix improvement proposal, that goes to these people that are elected community members to then decide on. So you have the Spartan Council, you have the Grants Council, you have the Ambassador Council, you have the Treasury Council. So Synthetix has a very deep and extensive array of governance areas that are being actively worked on by community member contributors. And the craziest thing about those contributors is that sometimes they have a deeper knowledge of the protocol than contributors that have been around for years. And that's not even a knock on the contributors. It's just some of these community members have just been around since the beginning. They've been around since 2018 to the point where sometimes I will go to them with questions and say like, hey, how does X, Y, and Z function work? Or how did it work years ago? I'm trying to pick up some context here. And that's really the amazing thing about DeFi and the possibilities that it really opens, because all these things are open and out to the people. So, sometimes the community just has this deeper knowledge of these subject areas as well.
100% love that. And it's also great to hear that you are tapping into that community and the power that you can get from it, because there's so much potential there. Kind of on that topic, can you break down the SNX token's purpose, what it's used for right now?
As we've kind of mentioned a few times, in passing, basically SNX is the governance token of the Synthetix DAO. So folks that have staked or LP SNX can then vote in I think it's every 4 months are the elections at the moment, for basically the Spartan Council, the Treasury Council, Grants Council, and the Ambassadors Council, which have different responsibilities and serve different purposes. SNX that is LP'd then also is used as collateral to back the debt of the system. So by LPing, SNX token holders then back the debt pool, and they will then receive the fees generated from the different Synthetix products like perps or spot synths.
That's clear. Thank you so much already at this point to both of you. This has been a really insightful session on the basis of Synthetix. Now, final question is, I know we covered a lot of these topics on your product roadmap, etc., but what is next? Is there anything else you'd like to share about your mid to long-term roadmap?
So really, what's next on Synthetix's roadmap? Obviously, there's continuing to support Synthetix perps and, building building that out, rolling out these last couple changes, and then continuing to support new markets, increase open interest caps, and so on to be able to onboard new users. But then with that, like this more medium to long-term look is once Synthetix V3 is fully live, the long-term roadmap is to be this like truly universal liquidity layer that can serve decentralized exchanges and DeFi protocols across all Ethereum L2s and EVM chains, and be able to support them in, this building out markets and, having Synthetix assets live within those markets. And that really starts with onboarding all of the existing Synthetix ecosystem projects, whether it's perps, options, option vaults. Mike mentioned, sports betting like parimutuel markets by the Thales team, and everything else that currently exists within Synthetix, onboarding that onto V3, and then going a step further and seeing what other possibilities are there, in insurance markets and everything else that doesn't exist, but will be possible within Synthetix V3.
Awesome. I like that roadmap, and I especially like that vision that you have for the long term. Thank you so much to the both of you. This was a super insightful session, and I hope that we can do this again in a few months' time to kind of dive deeper into some of these topics and see where you are with all the cool things coming up. But yeah, I appreciate you taking the time to do this.
Yeah, awesome. Thanks for having us.
Thanks again for having us.